Knight Capital got a lifeline on Monday. A group of investors swooped in and pumped $400 million into the embattled broker. But is this enough to save the company, and will it restore market confidence? For his thoughts, I'm joined by Curt Bradbury. He's Chief Operating Officer at Stephens, one of the companies involved in the deal. Welcome, Curt. Now, why is Stephens making this move? Why rescue Knight? Why take an investment stake?
Well, we felt like the business is fundamentally sound, and that this particular situation was a lightning strike event, and that everything else other than this piece of software that caused this particular situation was fine.
Lightning strike, as if it's going to happen once in 1,000 years or something. Why do you think it's a one-off event?
Well, it's just the situation was a brand new software having to do with the link to the New York Stock Exchange, and it just blew up. And it didn't have anything to do with the trading algorithms and the trading systems that Knight has become a leader in, and that they do so well.
Now, the group's investment stake is estimated at 70 to 75%. What part is Stephens?
It's a piece of that 75%. The documents will be filed, and all of that will become public in due course.
Now, was this the best alternative? That is an outright sale?
Well, I think so. I mean, that's a good question, and I think it was a good alternative. Now, you say outright sale. The existing shareholders will retain 25 or 30% of the company, so it was an infusion of new capital to boost the balance sheet, and the new group, the new array of investors will get 70% or so.
The new array of investors, including you, do you foresee a breakup of this company? It's got a lot of assets.
I see an attempt to rationalize the business. After something like this happens, I think a good management team, and we have a great deal of confidence in Tom Joyce and his team, a good management team would take an event like this as an opportunity to reevaluate in certain lines of business, and I think they'll do that. And I think there are some that they might think twice about. But the core trading platform of Knight Securities, that is what it is so good at and what it built its reputation on, is intact and working well.
Okay, so maybe the core may remain, but what about ancillary parts? What about something like Hotspot? JP Morgan's putting a $300 million valuation on that. Really?
Well, I don't know. That Tom is going to undertake an evaluation of all those things and make decisions as he goes forward.
But we might see some parts broken up possibly or sold.
Yeah, well, some pieces of it could be rationalized, as we say.
Any idea what pieces?
I'm not sure what they will come up with. I think you reevaluate your business, you focus on your core competencies, and make decisions from that, and that's an ongoing process.
Well, Curt, you saw the drop in the share price today, another 20% or so. Will Knight need more capital soon?
Well, we certainly don't think so. We think that what the investors infused into the capital base, the $400 million is new, plus which covered the loss, and everything else is the same. So this money is designed to cover the loss, and it basically puts it back where it was before. The bank lines are solid, so it looks like it won't need it. From my point of view, it looks like it won't need any more.
Well, how much longer will that $400 billion last for Knight?
Well, I think the balance sheet is solidified. In other words, it was making a good net income before the lightning strike. Okay. We replace the loss in the capital, and then its business now continues as it had. And so we certainly anticipate that its business and its net income will return to where it was before the lightning strike.
All right, Curt, let's talk about CEO Tom Joyce. How confident are you in him as CEO? Do you favor keeping him?
Well, yeah, that would be certainly my company's view, is to keep Tom Joyce. He's a good guy. We've known him for a long time. He's a very, very competent CEO and very astute at this business. And he has challenges with this situation and the evaluation of what happened and how the company should structure itself going forward. but he's a great manager, and I think they'll do a good job of that.
Is that just your view, or is there a consensus among the other members of the investing group?
Well, I feel like there is. Everybody has their own opinion. They'll vote their shares the way each member, each investor feels like they should. But it's certainly my view, and Warren Stephens' view, the CEO of our company. And
given the challenges that you mentioned that he faces, do you think they'll need to add more members to the board?
Well, I think the press release says this morning that the board and the company have agreed to add 3 members, and so that'll happen in the due course of corporate governance.
Do you think that'll include an independent chairman? He currently has a chairmanship as well.
You know, I haven't heard that mentioned over the last 2 or 3 days, but I would certainly think that Tom should consider. He should remain in all of his current capacities.
And given what we saw just last week with Knight Capital, what does this do to the confidence of the individual investor, the small investor?
Well, you know, we well know that this shakes confidence of individual investors, and that's a disturbing part of all of this. What I hope individual investors will take away from what's happened, though, is that our great American system of capital market system has worked. This company didn't need a government bailout. It attracted private capital. It was all handled within the private enterprise system. And I actually think that this is a great day for American capitalism. I think that having investors that have the capacity and have the knowledge to come in and take a look at something like this in a short period of time and do what these investors have done, I think speaks well for our entire system.
On the other hand, current shareholders of Knight Capital saw their control, their stake vastly diminished.
There was a substantial number of new shares issued in conjunction with this, and I understand that. I would say that the company was in dire straits at the close of business on Friday. And, you know, a current shareholder, I think, personally, I believe, was looking at a choice of this deal or nothing, a company that would probably go away. And so if you look at that choice and you say that the existing shareholders, the shareholders that existed before last Friday, we're looking at nothing or this deal, they end up in this deal with 30% of the company or so. And I think that is a fair resolution of the problem.
Something versus possibly nothing.
But something versus nothing.
Thanks a lot for joining us today, Kurt. Our thanks to Stephens' Kurt Bradbury. I'm Fred Katayama, and this is Reuters.